Welcome to the second installation of National Grand Bank's four-part video series. Today we're going to focus on the pre-qualification process and applying for a mortgage. Let's start with the pre-qualification process. There are four major advantages to getting pre-qualified for your mortgage. Pre-qualification process. Four advantages. Number one, peace of mind. Number two, a stronger offer. Number three, loan documentation. And number four, an expedited process. Let's look at the first one, peace of mind. The pre-qualification process provides peace of mind for the borrower and the seller. If I were selling my home, I would not accept an offer unless it was accompanied by a pre-qualification or a pre-approval from a reputable lending institution. Number two, the offer is stronger. If a seller has multiple offers, he or she is going to look at which one has a pre-qualification. All things being equal, the seller is going to accept the one with a pre-qualification. They might even accept an offer for slightly less if it has a pre-qualification as opposed to a higher number without a pre-qualification. Number three, loan documentation. Most lenders are going to ask for tax returns, pay stubs, W-2s, or some combination of these to get a complete picture of your assets and finances. It makes sense to get that documentation done up front to determine what you can afford as opposed to waiting until after you have a home under agreement. You usually have up to 7 to 10 days to have your home inspection, and then things get hectic. You're much better off getting that documentation done up front. And lastly, number four, it expedites the process. You can make your offer stronger by closing sooner. If a seller has already bought a new house and you're offering to close within 30 days or less because you've already been pre-qualified for your mortgage, you're potentially saving that seller time, which equals money. Savings can come from less money spent on the homeowner's insurance, interest on their mortgage, real estate taxes, etc. Pre-qualification helps you get pre-approved quicker and helps you close quicker. The application. The next section is about applying for a home mortgage. Before you apply, borrowers should ask for a federal document called the loan estimate. The loan estimate. A loan estimate will have all the costs associated with buying a home from offer to closing. It will have your closing costs, including title insurance for the lender and the homeowner, an estimate of homeowner's insurance, an estimate of your taxes, an estimate of what it will cost to record the loan at the Registry of Deeds, and lastly, an estimate of your per diem interest based on your closing date. The loan estimate is designed so borrowers can easily compare their mortgage costs between lenders and make sure that the rate and terms they are being offered compare favorably in the marketplace. When you have agreed upon your best option and agreed to make application with a lender, in most instances the lender will order an appraisal as soon as the application is completed. The appraisal has very little to do with the physical condition of the home. It has everything to do with determining the current market value of the home. Lenders want to make sure you aren't buying and they aren't lending on a white elephant. To determine the physical condition of a home, borrowers should have a qualified home inspector inspect the property before they sign their purchase and sale agreement. Obviously, it's paramount to you as a buyer and to us as a lender to know what the home appraised for. Each appraisal will be presented to the home borrower so they know what they're getting is what they're paying for. Once the appraisal goes through and the lender agrees to give you a mortgage, you need to prepare for the closing. In our next video, we'll be looking at the process of making an offer for a home. Thank you for watching.